What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and it is Christmas Eve. Let me see if I can do this right. It is Christmas Eve day. The markets are closed, so I can do a little bit of research on the back end. And I'm going to be a little bit of a Grinch today. Now, look, I'm festive. I'm a Florida man, so I've got my, these are flamingos with little Santa hats on them. So I'm being a little bit festive, but I'm here to be a little bit of a downer again when it comes to inflation. And we're going to talk about one of the supply chain concerns that I have going into 2022, as well as how to use that pain for profits, how to turn other people's pains into profits. We've been talking about this for months now, talking about the inflationary thesis and how some of the things aren't transitory and, some industries you should be looking at and things like that. So we've heard a lot about energy prices, and it's not necessarily hitting the US as hard. It's going to start hitting the Northeast a little bit harder, but we've seen energy prices spike in the Eurozone significantly, and that actually affects how meat is made, right? So there's this cascade effect that can happen. And let me just try and walk this backwards. So tonight I'm cooking beef tenderloin, and it's going to be beautiful. It's this lovely roast, and I actually got a deal on it. And in Florida, especially in Publix, around this time, you can get really good meat deals. Right now, ribeyes are running for about $8 a pound, which is very nice. And it's very similar to how turkeys get really cheap around Thanksgiving just because there's so much supply. But after that, things can get a little bit sketchy. And that's why I've been buying a lot of meat in bulk and throwing it in my deep freezer because, it might start to get a little bit more expensive. So here's the premise. You have meat. In order to make meat, you need to have a cow. In order to have a cow and grow it, you need feed. You need cattle feed. In order to grow that cattle feed, you need grains, soybeans, wheat, corn, whatever. And in order to grow that, you need to put nutrients in the ground because we have so much risk with respect to monocrops, right? If all you're doing is putting corn in the ground over and over and over, you need to effectively you have to add nutrients to the soil to get it to grow. And those nutrients are, for example, nitrogen, potash, and fertilizers and all of those things. And that's where things get sketchy. And so we're going to work from the natural gas side of things into nitrogen, into grains, into meat. And you're going to see how there can be, and there probably will be, a significant lag between natural gas prices spiking to nitrogen prices spiking to corn, wheat, soybean spiking to meat prices spiking. But that has happened in the past, and I think it's a little bit more of a risk. And it's not necessarily as huge of a risk in the US, but it can have effects globally as well. So for those of you that don't know, and I just learned this last week, you have something called anhydrous ammonia. And you use this to basically pull nitrogen out of the air. And I hated chemistry, but it was like NH3 or something like that. And the way to make this is you take natural gas and you burn it with nitrogen gas, and somehow some magic happens and you end up with, I'm pretty sure the output is water and then anhydrous ammonia. Okay? So if the input for this is natural gas and natural gas prices have been spiking, that means that nitrogen prices and the cost of fertilizer have been going up a lot. So this is a chart this is DTN, and I'm pretty sure there's an analyst company and help with supply chain stuff. And this is a look at several kinds of nitrogen prices. So the red line is urea, the green is anhydrous nitrogen, and then the orange and blue are letters and numbers I've never heard of. So look at how it's traded. It's a hockey stick right now, right? It's just basically gone straight up. And the risk here is if fertilizer prices get too high, then it becomes much more difficult for farmers to introduce more supply into the markets. If there's less supply and it's the same amount of demand, then things get weird and prices go up. All right, so that's a big risk. Here's another look at the same kind of chart, just zoomed out a little bit. And this is from FRED. This is the Federal Reserve database for all sorts of fun economic charts. And this shows us the price of nitrogen right now. And it is, we saw a massive price spike, and that is a massive risk right now. So the question here is it transitory or structural, right? If you go look at a chart of lumber futures, we saw that massive move from 400 to 1600, and then it round tripped. It's not that we ran out of wood, it's just we ran out of processing capacity because the lumber mills were shut down. So the question is how much of this is going to end up being structural or not? I don't have a right answer for that. I'm just looking for ways to profit on the markets. But I can show you some recent charts. This is going to be a chart of wheat. This is the wheat futures market. The ticker symbol is ZW. And we've seen spikes like this in the past. I do remember trading this in 2007, back when I really started to get involved in the markets. You had Potash, POT, Mosaic, MOS, Monsanto, MON, and a couple others that were absolute monster stocks to the upside because the price of nitrogen got so high that these companies had massive profit margins. They're effectively commodity companies, right? If we see a price spike in gold, then gold miners do well. That's just kind of the nature of the beast. So we saw massive moves in agricultural products after or during or just around that time with the great financial crisis. It definitely didn't help things when the cost of goods went up. This second chart is going to be, I think, corn. It's either corn or it's meat. It could be lean hogs, I'm not sure. But there absolutely is a follow-on effect. And there absolutely 100% is geopolitical risk surrounding the cost of food, right? The Arab Spring, and this is a chart, this is the bread helmet guy. I know you can, I'm overlaid on top of him right now. But when wheat prices spiked in 2007, and then I think there was a secondary spike in 2010, 2011, that effectively kicked off the Arab Spring. For those of you that don't remember, you had Egypt. They went through some stuff with Mubarak and the Muslim Brotherhood, and that sort of spread. And there were cascade effects, like for the rest of the decade, right? You can draw a line from the Arab Spring, the Iranian Revolution that didn't happen in 2011 because the State Department didn't really support it. Hopefully my YouTube channel doesn't get taken down from saying that. You have that, then you have the destabilization in Libya, then you've got ISIS and all these other things sort of, there was a butterfly effect associated with that. So there is the potential risk for this. There is the potential risk for rising energy prices to cause pain economically. Okay. And it's something that I think everyone should just be aware of right now. I don't think it's a huge deal just yet, but maybe go buy a couple extra pounds of ground beef and throw them in your freezer for a bit. This is a chart of, I'm pretty sure this is beef. And we haven't really seen a massive price response to this, but we have seen convexity, upside convexity in meat prices before. And this is one of those, if this really starts to take hold, and if we continue to see more stimulative effects from Western nations combined with the continued fiscally or monetarily loose policy from some of the major central banks, then this can have a cascade effect. And it's one of those things where we will not adjust to it until it's too late. All right. So that's the risk, right? Now, where are the rewards? All right. So you really should look at the meat producers, things like Tyson and Smithfield, because if prices go up, their margins increase, and then they have pricing power and they can continue to work that. And then you've also got the agricultural stocks. Unfortunately, Monsanto got bought out by Bayer, so it's not tradable. Potash got bought out. It's not tradable anymore. So there's only a handful of names that you can really look at there. And there's one name that we've got on the forefront inside of PVA right now. It's currently undergoing what we call a VWAP pinch, where you have the volume weighted average price against key pivot levels, both to the downside and upside. And on Thursday, it cleared above the anchored VWAP from the recent highs. And I think that this does have the look of a base on base pattern with the significant potential to take out those highs and see a monster run. Okay. And it's one of those where if enough people get eyeballs on it, it will start to cascade again. All right. At PVA, we don't trade based off of stories. We don't trade based off of narratives. While they are good to frame the discussions around it, we always use our roadmap to dictate when we get into trades. All right. And our roadmap is currently showing that prices, once we saw this pullback, they're currently being accepted. Anytime we see a push to that key LVN and volume shelf and prior resistance, we're finding aggressive and responsive buyers into that as well. So that is the key for us, saying, hey, you know what, there absolutely is support for this stock. There are people buying it at slightly lower prices, and I think that institutions and funds are trying to get in without showing their footprints off as best they can. So we are going to put on this trade into next week. With my clients, I'll show the exact call option to buy, as well as a stock trade with a stop loss embedded into it as well. So if you want access to this, and if you want access to the trades we're taking, as well as the approach that we do, below this video is a webinar that you can get access to that shows you why we look at our roadmap, how powerful it is, and the possible profit potential that you can get from this as well. That's all I got for right now. Enjoy your holidays. Merry Christmas, everyone. And I'll see you on the flip side. Take care.